Hey, what's up guys? Mike Sharp here. This is Sharp Investing, and I am going to do a summary of some of the trades I've made over the last few months. I was trying to do these each month, then they went to every 2 months. So I think this is 3 months worth of trading. I've got a bit busy and I don't have time to do as many videos, so I will just update the moves I've done recently. I've got a few on StoneCo. I've got a SPY entry I had and exit. I've got Meta and Flow Traders moves, and those are the ones I'm going to talk about this video. I've also got a bit of an update on the Fed/economy, which is based on my last video. My view is a little bit different now. So first off, let's talk about StoneCo. Now they released earnings on the November 10th, and I added about 20% to my position, actually about 30%, including a bunch of calls that I bought right before the close. And I did that because, a few reasons. Like, I knew that the earnings would probably beat on the upside, because they almost always do that. I actually haven't seen not a big beat in the last year and a half since I've owned the company. They guide very low, and then they always beat their minimum sort of guidance. And if you look at the stock behavior, a lot of the time the stock runs up just before earnings or just after earnings, and it hadn't run up, and I thought there's a pretty good chance we'll get a run up here. So I bought a bunch on right before that earnings release on the 10th of November, and then I exited it on the following Wednesday. So I had a 3 trading day holding period, and I got a quick 30% on that. Sold at 14. So that was a great quick outcome. I don't want to annualize that 30% gain because it'll be way too high and it won't make any sense. But if I had held it, I would have made more money. But I thought there was going to be some resistance at 14, so I just sold it and took the quick profit. What else did I do? Just as a reminder, I did add to my StoneCo position, like the permanent StoneCo position. I have 2 different sort of ways that I do this. I have about 80% of my portfolio is permanent holdings or permanent long-term. Let's say maybe not permanent, but it's 3 to 5 year holding period. And I've got StoneCo, Alibaba, Pinduoduo, Flow Traders, and a couple of other small ones in there. And that's my permanent portfolio. And then I have 20% that I mess around with. I do shorter term trades. I can move it into cash if I'm feeling negative on the market. And so I use about 20% to sort of keep myself occupied, right? So I don't touch the 80%. So the trade on the 10th was just part of that 20%. And then the purchase I made in October, I put my StoneCo holdings to 30%, and I did that around $10. So I think I did a video update on that one. But so that 30% has done really well over the last few months, and I've still got that chunk. I've sold off the trade. One other trade that I had was I also had some StoneCo calls that I bought. I can't remember. I think it was early in 2023. I had $15 calls for January 2025, and I just exited those today. It's December 28th. So I made a pretty good profit on those. I think I 4x'd my money on those ones. So I took a nice gain on that one. I booked that. And who knows, maybe I'm leaving money on the table. Maybe it'll run up to $30 and then I'll have left money on the table. But that's a good move. That's a good move for me. I'm happy with it. I did learn a lesson a long time ago on calls. I had one of my biggest blunders ever was with Apple calls when they first released their iPhone Plus. The stock, I think, was trading at 10 times earnings, and nobody believed the Plus would sell. And I bought a ton of these long-dated calls, so leaps, and I was right. And I had a huge gain going into the Apple Watch release. And instead of booking my gains, I held them, and I think I lost the whole gain that I had put up, and it was a huge chunk of my portfolio too that I would have gained. So I learned a lesson on calls. If you have a nice gain, probably a good idea to take it, because they do have the time decay on them, which means that let's say if Stone went down to 14 by the end of the year, like let's say it just stopped around here and then came back down, those things would be worth zero. So I'm just booking the gain now. Okay, so that's StoneCo. The next one is the SPY. So on the very same day, it was like 10 minutes before close, I bought a bunch of SPY as well because and this is a trade, this is not a permanent position. So I bought a bunch of SPY, and I can't remember exactly when that was, or what price that was at. But I think it was 438, something like that. 430, I think it was 438 on the SPY. And I bought that because the stock the price did something I liked. It broke out above the 50-day moving average. It came in and retested that, and then it bounced off it and up. And I thought that meant there was a potential run up coming. And then next week, what happened was the CPI got released, and it was much lighter than everybody expected, and so the stock just completely jumped. So that was a bit lucky. I didn't bet on that jump, but I think that was the Wednesday or the Tuesday the 14th. So the SPY jumped, continued to run up to 456, and I took my profits there at 456 or 457. I can't remember, but I had a good quick gain. I thought the market was going to get stuck and come back a bit. It didn't. If I had just held, I would have done a lot better. And I do have a note on my chart that says if this thing breaks out of this flag pattern, there's a bit of a flag patterns when something comes way up and then it comes down in a consolidation pattern and then it breaks up. That's usually a very strong signal that it's going to continue up. And I had a note on my screen that said, if this thing breaks up, it can go to the moon. And I didn't listen to my note and I sold it. And so that's a lesson in listen to what you think rather than your emotions, because I had thought that out and then I sold emotionally. I thought, oh, that's a good gain. I just want to book it in case it gets stuck. So that was a bit of a win and a bit of a mistake all at the same time. That was one. And now I should mention what happened with the SPY. Unless you're living under a rock, you know that the Fed has changed directions a little bit. Now, I did a video on talking about how they were potentially trying to crash the economy. And I expected them to just keep this higher for longer path until all the numbers came down where they wanted, the inflation, the employment numbers and everything. And I thought that they were going to crash the plane. But Jay Powell came out and had a press conference, the last Fed conference. He basically said, I'm going to try and land the plane now. Meaning that he's going to try and engineer a soft landing. He's actually trying to get ahead of this economic problem, which I thought was coming, and maybe he thinks it's coming too. And that's why he's talking dovish and he's going to pull back on rate. They're going to pull back on rates in 2024. And the market really liked that. And so that's actually surprising me. I got that one wrong. I thought they were just going to go head down and just keep going high rates to crush inflation. And it looks like they might be proactive. I've never seen the Fed actually act proactively before. And, good on them for actually trying to get ahead of this. I don't think they're going to be able to do it. This is like trying to land a jumbo jet on an aircraft carrier. Right? I think there's still going to be economic problems coming. There's pockets of problems, and I still believe there's going to be economic pain coming. But as I've said a few times, I do not bet on the direction of the market based on my economic predictions, because those two can go in opposite directions. The market told me it was going up, even though I thought this recession was on the way. So I had to go long because the market said, we don't care about your recession call. We're going up. So that's the SPY. I did have a loss here with Meta. Now I tried to get on the back on the Meta train as it broke out above its sort of 326 resistance. I bought the breakout. It came way back down into the 320 or 318 range, and I got out there because I looked like it would fail, and then it's taken off in the other direction. So I had a quick loss there, and if I had just had a wider stop, or if I had just widened my lens a bit, that might have worked out well. But I think in hindsight, what I was actually doing was I had some remorse about getting rid of Meta previously. I mean, my last sell was at 285, I think, and I kind of go, oh, I wish I hadn't sold that. Let me get back in. So that's the FOMO costing me money. Okay, what else have we got here? We've got flow traders. Now the last one is flow traders. This is a permanent. Those first three were all that's my 20% play money, and then this flow traders purchase was a permanent add because I think I bought it 1650. So I've really beefed that position up. The stock is not performing and has not performed since I've owned it. But I still believe the company is a great business, and if they get the right set of circumstances, which I think are inevitable, the stock will perform. So they do well with high volatility and low interest rates. And right now we've got low volatility. You've got volatility to the upside, but that doesn't really count. And you've got high rates. So those are both hurting them in terms of the cost of capital, and the revenue is not that high because the volatility is low. So I do think both of those things are temporary. They will eventually shift. The market's not going to go straight up forever. It just does not do that, right? So you will get high vol on the downside at some point. And if you get an economic problem, which always happens, then eventually it always happens. You're going to get the rates coming down to more constructive levels for flow traders. The other thing I like about them is it's a bit of a black swan protection for my portfolio. So if there's ever a black swan event where everything gets demolished, they will actually do quite well on that. And as I'm reading Nassim Taleb's Black Swan book, it makes me realize that black swans happen a lot more often than they statistically should, right? So in my investing lifetime, I've had 3 black swan events. If you count the NASDAQ meltdown and .com meltdown was a black swan event, I think that was statistically supposed to happen once every 100 years or something. But that happened in 2000, 2001. Then in 2008, you had obviously the great financial crisis. And then you had 2020, COVID. So there's been 3 in 23 years. And if you go through those things, like I know 2020 was pretty quick. It came down quick and went back up. But if you're in the middle of those, it is really painful to watch your portfolio go collapse over a year or 2-year period, right? We haven't really had a real bear market. We didn't really have a huge one in 2022, but that stuff is not fun because not much escapes the carnage in those situations. So I like having flow traders. I feel my portfolio has some good diversification because of it, and I thought 1650 was quite cheap, so I've added to my position there. I'm watering the weeds, guys, watering the weeds. You're not supposed to do that. You're supposed to water the flowers, but I am watering the flow weeds. All right, that is my update for this 2-3 month period, and I will catch you in the next video, guys. Thanks very much for watching.